From a corporate trader to an entrepreneur, we have Rahil Shaikh, the founder and managing director of MEIR Commodities. He has fastly pivoted the company from just sugar trade to milling, warehousing, exporting, and even beyond sugars. The IPO bound company has huge plans, and today we are in discussion with Rahil Shaikh. This is ChiniMandi Podcast, and I'm your host, Sriraman. Good morning, sir. Thank you for joining us today.
Thank you. My pleasure.
Yeah, so I have an interesting question or curious about the business model that you have at MEIR. So you started as a trading firm and you have been busily backward integrating into owning and operating mills. What is the end game? What is the strategy here? Because one is very agile, the other is asset heavy. How do you balance this? What's going on?
So the idea when we started MEIR was to look at the entire value chain of the business. So initially we were a trading company from 2018 till 2023. And we always felt that as a trader, you'll always have a second-hand information on and data on the productions and the cost of production. So we got the asset at a fair value. And we thought that moving to the value chain is the great thing rather than just be a trading company. And we managed to get 2 assets in India, which was at a fair value. And looking at the future of our expansion plans is to go into specialty manufacturing of sugar, ensuring that we are supplying to the industrials in India. So we wanted to secure our own production side as well.
Right.
So one of the reasons we're very strategic is to go into production side as well, and that allows us because it between the flip and flop of the export policies, the stock limits, the amount of controls which comes in as a trading company, we can bypass that if we have our own manufacturing based assets.
Right. So is it more about stability or also some amount of pricing power and all the?
I mean, it's both. It's both put together. I mean, it brings the stability to our business so that when you get a shocks like stock limit, your other businesses is providing you with your production side, which is providing you with it. And it brings stability to the organization that you're participating in the entire value chain.
Right. So how far backward are you going to go? Like, do you have a plan of maybe even having farming, cultivation? So far backward.
In India, currently farming and cultivation is impossible.
Yeah,
it's in the hand of the farmers. So we'll allow our farmers
to grow. There's no enterprises allowed in the
correct. So we will allow our farmers to grow sugarcane for us at a fair and remunerative value, which the government announces. And we would like to go into specialty sugars manufacturing and going downstream and upstream on both the side, except for the farming and agri input side.
Right. So do you see MEIR becoming more like a LD, Cargill? Is there a similarity you can draw to the strategies that you have?
I think
operating across the value chain.
I think we are very humble on that account. I mean, we cannot be the Cargills and the LDs of the world because these companies are there flourishing for about 250 plus years or 200 years. At EDF Man, where I was, it was 230 years plus company. And we are just 6 years old. So, I mean, we are currently toddlers in that part of the world. But I think the vision is there. Every company in India, if you go and look at the top 4-5 big industrial trade houses in India, they all started as a trading company. And in the last 40-50 years, you see them in the top 4-5 in the world with the manufacturing based assets as well. So I think we should have a dream. I think we should, and we all should, and we will do our best to keep ourselves sustainable and keep growing. And probably we need to have that lead time to achieve what the others have achieved.
Never say never, because maybe trading companies are 200 years old, but look at the tech companies. A 5-year-old tech company gives run for the money to Google and Microsoft, which is 50 years old or 25-year-old company. But in tech, that is the equivalent of a 250.
Correct. I mean, if you look at our trading side of the business and our manufacturing side of the business, it's more farm related and it's more of operational related. If you look at the trading side. So, I mean, the tech is going to be a part of it at certain point of time. But today, I mean, we are hardcore trading companies and a manufacturing side. So, I mean, it will need its lead time rather than just to think that we can achieve it in the next 5 years or 7 years. But definitely, I mean, the
Journey.
plan is there, and journey, as I mentioned, there is a journey for it, and we shall be able to. We shall be able to.
Wish you the best on that, sir. A little bit of management lesson here. See, companies or mills are assets, and heavy ownership, asset heavy ownership requires a lot of operational, intensive operations and so on. Trading is more agile and requires tactical thinking, on the feet, risk taking decision. How do you balance these two mindset, right? Because think of it this way: Uber doesn't own cars; they operate. A Meru or someone else, they operate cars. Imagine you are doing both. It's almost like that, right? You are as agile and asset heavy. So how do you balance?
You see, you have to also look at the pedigree of the individual from where he has been coming up. So when I started my career, I was working as a with one of the agency company for a multinational.
Right.
Then we moved on to become an MD of a multinational and continued to work there for about 15, 16 years. At that particular level, you had the ability to move yourself between production as well, because we used to have an asset in India, which was a refinery. We were also trading on from that refinery end to end. So I mean, it's your DNA which you develop over a period of time.
So you've been there, done that.
Absolutely. And I mean, at the end of the day, you need to have resources. I mean, people with a trading mindset in the organization works on their trading book, whereas the people who are on the manufacturing side works on the book. I mean, at the end of the day, I mean, you need to also have a right resources for both the arms of the businesses. And today we are doing what very good on that account. I mean, as for myself personally, it's just the DNA which has been developed, and we are managing to do that.
So talking about your past experience and DNA, you are called as one of the high risk takers, right? So could you share an experience where one of the risks you took nearly broke you, but that was also the biggest lesson you learned from it?
I think that's a misnomer on my side. I mean, on my character probably, that I am a risk taker.
Okay.
Technically, I am not.
Okay.
I am very risk averse.
Huh?
I'm a very risk averse. The reason is, please you understand, as I mentioned, that while my career, I was working with an MNC.
Okay.
So from day one, we knew what our hedges are.
Right.
What is the exchange rate risk are? What is the VUCA world doing? Where are we going to go wrong and right in our business strategies? So we have always been learning those risks, and it made me easier to start MEIR with all those risks embedded in me. And when we took this decision of doing the businesses, taking our calls on the businesses, we're very risk averse, where we can hedge ourselves, have...
You are mitigating the risk, but isn't the whole trade a risk intense business model?
I think if you look at India per se, for example, we don't have a long-term book here.
Yeah. Okay.
So the risk is nothing.
Right.
We have a very short-term book here. You have a monthly releases here.
Right.
You have a 7-day window. You have a 14-day window. You have a 20-day, 1-day window. The window closes. You don't have an exchange risk here. You are an operational risk here of moving the cargo from one place to the other. But if you look at international market, you have the hedges available on London. You have the exchange rate available. What you don't have in your hand is the macro. You don't know what funds are.
Weathers or some global
weather.
geopolitical.
You don't know what geopolitical. So at that side of the businesses which we cannot hedge ourselves.
Correct. Right.
But wherever is available, where we trade our international market, like we have established an office in Dubai, the whole idea is to mitigate and cover the risk which is possible.
Right.
And as regards, we have an office in Sri Lanka now where we do our warehousing businesses. There as well, we ensure that we are taking the FX in the forward market trading. So we are doing our best to risk. So as far as I mentioned, on my character, it's a bit of misnomer in the market that I'm a risk taker. But I probably tend to take risk which is good risk. I mean, you know your downside.
Okay, sir, I'll put it this way. I'm sure you wear your seatbelt. I'm sure you have your insurance. But you are driving an F1 car, not a Maruti Alto. That's all I'm saying. So
no, I agree. And the second question which you asked was, which was the biggest risk I took?
That kind of nearly hurt you or broke you, but that also the lesson you learned, right? It was like you got punched in the face, but that was your biggest.
So as in, I worked for about 24 years and then started off this organization. That was the biggest risk I have taken.
Okay.
So all my pensions, all my gratuity I've put into this organization.
Right.
And we went through the bad phase. I mean, the first year was a very bad phase of us. We learned those lessons. We corrected ourselves, corrected our mistakes, and then we had a good run of MEIR Commodities.
So
And
talking of founding this company, what were some of the gaps or inefficiencies you saw in the market, or a unique proposition that you bring to table as such when you started this company?
you see, as I mentioned, that what we wanted to do is we wanted to be different from all the companies in India currently, trying to. I mean, we can't be. But you look at what we have achieved today. We are one of the trading companies in India, which is trading sugar into the world market, from the world market and from the Indian market as well. We have an establishment in Dubai. We have an establishment in Sri Lanka. Then in domestic market, our participation is amongst there. We are distributing sugar, buying from the sugar mills, and going into the deepest market of India, like Assam, like Calcutta, and distributing it there. That inefficiency we have trying to sort of get into our system, where logistics costs are very high. So we are trying to see how we can operationalize to have a better logistics cost than others, the warehousing cost. And then we moved on into the sugar mill, which is a 5,000 ton cane crushing plant, a 60 kiloliter distillery. And we are also now take over a plant which will produce jaggery and khansari,
Right.
which is an alternative sweetener.
Yeah.
And that plant is about 2,000 ton. So what are we doing? I mean, if you look at the chain of the value, I mean, you will find a sugar mill producing sugar,
Yeah.
but not trading it.
Right.
You'll find a trader buying from the sugar mill, but not selling it. So we are there in the entire value chain. I mean, you don't find any Indian company from end to end with an alternative sweetener, with jaggery, khansari, invert sugar into them. And from our own sugar plant, we are looking at now making some specialty sugars as well. So, we will be, this is the vision. Idea is to be in the value chain from end to end, except as I mentioned, from the farming side and the agri side.
So, as diverse and impressive as that is, but you've also expanded beyond sugar and allied sugar products into other commodities. So, what are some of the lessons there?
So, you see, we are, we try to work into pulses and spices. We imported some coriander into the country, and we have done some pulses like tur and chana, pigeon peas, which is called. So sorry, pigeon peas is tur and chana is chana. We look at SNDs of these commodities, and for a country size like India, where 140, you have 145 crores people, we think that these are opportunistic trade which comes in. So we are not there on a long-term perspective into it. Whenever we see an opportunity to import and trade into the country, supply in and participate into the supply chain, man, we do it. Otherwise, we don't tend to sort of be into those commodities. Our focus remains sugar trading and sugar manufacturing. But we do on and off businesses in this depending on the S&D of this commodity.
Right. So whenever you are placing a metaphorical bet on any of the trade, what signals do you watch before you double down or you walk away? How do you say
So we have a big research desk in the company.
Mhm.
For our size, it's a big one.
Okay.
So we are partnered with a London-based brokerage house called MEIR Commodities.
Yeah.
MEIR, sorry, not Commodities, MEIR, and we provide sugar research to them.
Mhm.
And also we have in-house which are doing for pulses and spices and many other commodities. And when we see an opportunity, I mean, we don't tend to, bet a lot on doubling up of things or backing out. We take risk, which is, as I mentioned, which is
Well calculated.
well calculated. Some businesses are, most of the time, in pulses are back to back. So we buy off Tanzania,
Right.
we sell into India, and we sort of try to sort of be cautious on what we are doing. So our research desk helps us because they do sugar. So there are multiple commodities which can be done along with it, and we tend to sort of use that as a judgment.
Let's focus a little bit more on sugar. So India is evolving a lot. I mean, in our 5,000 history of sugar, at least now we see some trends where we are moving from just being transactional trading to something more strategic globally. What's your opinion on that? How are we doing as a country into sugar trade?
I think India is ever evolving, but you look at what are we doing today? We have a production of about, say, 25-26 season will produce about 35 million tons.
Yes.
We shall be diverting about 4.5 million tons into ethanol. So we'll be left out with about 30.5 million tons.
Which is our consumption?
Our consumption is about 29, 30, 29, I would say, because current year dispatches are low.
Yeah.
So we are left out with about million and a half for the next year.
Right.
So we are more domesticated than international. So I mean, our participation in international market is a swing factor. We are king of swing for the world now. So our policies.
So when our 2 million extra, 2 MMT comes in extra, that is the swing you're talking.
That's called, because the world does not know until it comes.
Right. And that disrupts a lot of other people who are having their own plans.
Absolutely. And when you look at global, like Brazil, Thailand, they trade their S&A.
Right.
We trade our policy.
Okay.
So that's the difference. So I feel that India for the world market is not a sustainable exporter.
It's a wild card at this moment.
It's a wild card entry at all point of time. It's a big boss wild card entry, So I would say that I've always been advocating that we should have some long-term policies. Like ethanol today is a great boom for the Indian sugar industry. So what has ethanol done? Ethanol has taken away 5 million ton of sugar. Just imagine if 5 million ton of sugar would not have been diverted into ethanol. We would have been today having a surplus of about 7 million ton to export.
Right.
So if you look at Zarniko's report recently, it says 7.6 million ton surplus in the world market. But technically the surplus is only 1.5 million. The reason is they are banking that 5 million will be produced in India more this season, but that 5 million is not exportable.
Right.
So the world surplus technically is only rising by 1.5 million ton and not really by insignificant.
Yeah.
So India is a very key to the world market, but it is more of policy driven export than rather than S&D related. So it is evolving, but I think still it's just a wild card entry. Rather.
Do you also think India is usually a price taker from a global point of view when it comes to sugar?
I think you see, as I mentioned, we are very domesticated. So that 29.5 million we have to value for it. For a 1.5 million in the world market, even if you are receiving a premium of $20-30, it's a very meaningless thing. Correct. I think what we are not able to achieve in the world market is we are unable to brand ourselves as a sustainable exporter. Once you have a brand, like I used to export a sugar mill from Maharashtra, exporting 20,000 tons into Afghanistan and they used to love that sugar. But once the quota is over, I can't export of that sugar. So they go to some other mill in S30 sugar, which does not have a similar quality, and then they say, this sugar is not good.
Right.
So what we are not able to achieve is a sustainable quality and a sustainable export.
We need a GI tag for our exportable sugar, something like that, right?
What I mean is consistency.
Yeah. Every year it is up and down.
630 mills this year got a quota of 2,000 tons. Now, how do you provide somebody with a consistent quality supplies? It's impossible.
Right.
Because the quota I had to buy from various mills, supply from various mills. So these are the things which does not allow us to be a price taker.
Right.
If to become a price taker or a price maker, whatever, I mean, you really need to define that this is my permanent policy, these are my long-term policy, these are my qualities. And if there are multiple qualities, multiple bags, multiple markings.
Excellent insight, because if we are figuring out as things come, then we are as close as the rest of the world.
Just think from your own perspective. You go to a supermarket, you find a brand which you like, and if that's not there on the shelf, you buy another brand, but you take it, but the quality you may like, you may not like. So consistency is branding. I mean, branding of our country, branding of our commodity, and branding of ourselves. I mean, that's how.
So is it only the policy issue? Because our policymakers usually put our self-interests first before we open up for the export. Right?
See, I was only answering to a question. As I mentioned that for Government of India, important is the domestic market, which they are doing. So, and we don't complain about it.
Yes.
As far as the diversion to ethanol is consistent, we need to do it because That takes away the world market pressure from us. And that million and a half, we cannot be determining the price.
We don't have enough forest too.
Correct. So, I mean, that you have to, when we did 11 million tons of export, we were a best raw sugar exporter to Bangladesh, to Indonesia. They used to love the quality. Why? Because consistency, about, the supply is available. And then after that, we had a break of 2 years. Then we come for a short period now. Then we have again a 6 weeks or 6 months of lag again before we start up again. So, I mean, this is where inconsistency does not allow us to be a price.
So talking about, we were talking about hedging and how you are a low risk taker and so on. So from an Indian point of view, we lack a robust, futures and hedging options available for traders. So what do you think of it, of this scenario? How do you operate in lack of that?
You see, this is a very unfortunate thing in our trade today, that we don't have any mechanism. As I mentioned, that the domestic book is less than 7 days to 14 days to 21 days or 30 days.
Right.
There is no discovery for next month, or there is no price discovery to the farmer whether sugar cane needs to be grown next or corn needs to be grown next. So that's a very unfortunate part. But please understand that the industry went from control to partial decontrol, and now again more controls. So how does a future market? The government of India, first of all, have restricted the trading of these commodities. But at the end of the day, please understand, today we are in the most controlled regime, wherein the sugar cane price is controlled. The sugar price within every step there is control. Monthly release mechanism, MSP, which is the 31,000 rupees currently. So how does you determine a futures market with an MSP down there?
Right.
If you look at what happened to oil in COVID period, it went down to 0 to minus.
That's true.
And today you have 31,000 rupees of an MSP. So I mean, the futures market will be completely not operative until you have such kind of regime. So I think.
So you're saying not only does it exist, it also not looking feasible to exist.
It doesn't look feasible.
Yeah.
With all these controls around, you see, you need freedom to trade.
Right.
And I think one thing which, not a criticism to anybody or our trade, I think when the market was evolving, it didn't had a brilliant participation. You see, we became 100% deliverable futures market. No futures market thrive on 100% deliverables.
Yes. So that's where you find the arbitrage. If it's 100% deliverable.
I mean, please understand, is a futures contract with 100% deliverable contract. You have so it never evolved. I mean, you need a bit of speculation in the book. I mean, you need a bit of millers hedging to be allowed. I mean, the industrials needs to come in. The buyers like Nestle, the Pepsis needs to be allowed to sort of participate. I'll give you a little more detailed insight. When I say 100%, it was a deliverable contract. It technically didn't have much participation. It had a very participation from the millers who wanted to deliver the cargo. But the receivers were not the industrials. The receivers were more or less the local traders. The quality was, again, multiple qualities delivered.
This was about 10 years ago, right?
It was about 10 years ago.
Yeah, which got defunct.
Which was sort of, not as a criticism to anybody, but we are not, our economy as such, and our country and our policymaker as such, that they don't want to see the forward market. There is a bit of, if the forward indication to you is that the markets are going to be higher, it's good for us that it gives you a 12-month of discovery, that you decide on what you intend to do. But we are very shy and afraid of knowing that the future market can be higher.
Okay. So it's a cultural factor.
Since the time I have seen the sugar market, we were the first participated to it into the country. We have seen that we are averse to see the truth.
Okay.
That, we may have a failure of the crop.
Right.
The market is going to be higher. We don't want to see that. So it's not, as I mentioned, it's not a criticism. It's just, I think it's our It's a DNA that we
So
don't
it
want.
takes away some amount of liquidity from the market, operators, everybody, right? All the players, right? So how do you mitigate risks here again? So you only depend on other futures markets out there, or
See, Indian sugar you cannot hedge on the world market.
okay,
So our domestic is more or less a flat price market. We buy and sell. We do our research, but as I mentioned, we can't have a long term book here because there are hardly any long term sellers in this market. So we have to benchmark ourselves with a very short lived book here and trade around. But there are no hedges available. It's a
right. As a company, what are your other options? As does MEIR participate in other futures market?
No, as I mentioned, we are a very sugar eccentric company currently.
Okay.
So we are into sugar in international market. We hedge all our commodities, whatever we are trading, and that's why we have an office in Dubai, in Sri Lanka. We hedge ourselves. What we do in India primarily is a hedge.
Right. So you mentioned about all the calculated risk you taken, steps to mitigate them, but we also spoke about macro factors, right? So there is always a new global geopolitical crisis happening or some climate related crisis happening. So there's a bunch of macro that you don't have, nobody has control over. So how do you play safe there, or what do you do to mitigate your risk from a macro point of view?
I mean, study is what we do. As I mentioned, we have a research desk which does all that. We keep updated to ourselves.
Study and pray.
What's happening. I mean, nowadays the game is Twitter. I mean, before Mr. Trump comes in, you need to be on the Twitter. So I mean, today look at the sugar market in the world market. It's also a Twitter-driven game now. You see a lot of people on the
So speed and velocity of decisions.
Absolutely.
You have to
I mean,
make fast.
I mean, you have to. And as I mentioned, we don't double up or we don't we run away, but we take calculated risk. And this part of today in the VUCA world, I mean, you can't be 100% hedged to all the things what you're doing.
It's always a VUCA world. People say like it's a new thing.
No.
From the time of modern history or before.
It's just the terminology which has come out recently. But I think we all have evolved in the VUCA world,
Right.
And I think it's going to be more tough going ahead, in my opinion.
So if you were to collectively give a voice to all the Indian players operating in whether trading, export, manufacturing, milling, are we ready to handle at a global level, or we are again very inward focused and happy with what we have?
We are a country of entrepreneurship. I mean, I think the world is open for us. Look at what we are doing in tech. Look at what we are doing in automobile, pharmaceutical. I think the sugar is also the same. I mean, it's just that we need to expand our bases. I think. I mean, we are very Indian eccentric because of our 145 crore population. But over a period of time, I think we need to ask for freedom in trade. We need to have a long-term policies which we need to ask him. And I think we also need to start looking outward for our growth.
Embrace capitalism. Absolutely. And pray for that, right? Sir, your company is IPO bound, which is a great deal for a company that is like 7 years old. So it's very rare for a commodity company to go IPO because they prefer some amount of opaqueness, as opposed to transparency and more governance. So what's your vision here?
I mean, first of all, thanks to my team and God Almighty. I mean, we could reach here in quick time, and I hope He blesses us for the future as well. So we are, as I mentioned, that we are very different today. We don't have multiple peers in the country. I mean, we are not a commodity trading company, but we have now manufacturing base.
Like fully
we have warehousing businesses and we have trading businesses internationally and India as well. So I mean, we are now concentrating that we would be benchmarking ourselves more towards manufacturing. We will be looking at more, growing ourselves there, because our plant currently is 5,000 tons for sugar and 2,000 tons for alternative sweetness. So we'll look at now branding of the alternative sweetness
from a B2C angle.
From B2C angle as well, and sugar will continue to produce currently as we are, but on alternative sweetness, our idea would be to brand and go B2C as well on that segment. We feel there is value chain in that, and there's value addition into that. But I think we are now a very different company. We are not a sugar producer or a trader. We are sitting inside the value chain. So I think we'll have to find a new word for ourselves, kind of commodity manufacturer.
Integrated player.
Something like that.
We'll come up with a
PTC or something, But I mean, terminology needs to be changed now. But I think
So you are a category of your own.
I mean, we are a category of.
So I have a few rapid fire questions. You can answer in few words or few seconds. So it's mostly like a quick take. So let's begin. Biggest professional or personal bet that you have taken?
Leaving a job and starting off MEIR Commodities.
So one market in the world India must crack next.
I think sugar in food,
Okay.
which is missing. I mean, we should be the largest biscuit manufacturer of the body.
So if you are a
Photo.
sugar operator in these three countries, Brazil, India, Indonesia, which is the toughest one?
India.
You're already there. Okay, most misunderstood thing about trading,
Profiteering.
profiteering. So you're saying that doesn't happen as much as people assume it. So
Because since the Mother India time, we have been considered that
agree.
any
I mean, if you're
any trader is a hoarder, and any hoarder is a profiteer.
and that's a worldwide opinion. If you read Jonathan Kingsman's Sugar Casino or Commodity Conversations, he deciphers the whole thing. If anything, it's the opposite.
I think the two words which comes to my mind is satyavas and profiteering.
So your advices to young traders, is it play big or go safe? Or it could be any other option.
Go safe. I mean, in today's world, one has to be going safe. Play big is also a game, but at the end of the day, it's
So any other any startup in the sugar or commodity sector that you really caught your attention?
the sugarcane side. We have been fascinated with this AI on the sugarcane side,
Right.
on that side, and I think eBay on the trading side, which was being developed by JKs. We have been those are the things which
Yeah, eBay sugar by the
correct.
from JK Sugars.
Yeah.
Okay. Thank you so much. Thank you, sir. I thoroughly enjoyed our conversation and looking forward to hearing more on you on perhaps some other episode.
Thank you so much.